Hey guys, Stock Saturday, and it's been a slightly green week, about 2% up. The keen amongst you will probably know why this is. And yes, it's Cleanspark basically. So that's provided the bulk of the move, about 3,000, about 2% up on the week. A few other movers sort of here and there, which I can come back to in a bit, and a couple of sort of changes. But let's have a look at the news. So we won't get quarterly earnings or anything for a little while, but you do get more sort of frequent updates from the Bitcoin miners, with them doing the sort of monthly operational updates and just sort of various announcements here and there while they're still expanding. And Cleanspark, don't think I mentioned that they bought basically a ready-made facility. I didn't quite get to the bottom of whether it was sort of an unwanted facility from someone else or just, something people were trying to offload. But yeah, they bought a ready-made facility basically for $9.3 million in cash. They had cash on the balance sheet. I still don't know whether this is because they've been diluting more. I guess we'll find out a bit more in the quarterly update. But yeah, they've ordered sort of a ton of their XP miners that we were sort of seeing last month, and they thought rather than sort of build out a facility over the next 3-4 months, they would buy a ready-made facility to put some of them in. They've still got a sort of large facility, the Sandersville, which is sort of coming towards the end of the year, which will provide 6 exahash. So that is quite a lot of theirs. That's sort of double what they're at now. But yeah, to put some of them in, they just bought a ready-made facility, which I think is quite good, to be honest. If we do see a decent rise up in Bitcoin sort of off the back of the ETF, or multiple ETFs, then yeah, much better to just get those cards working straight away. So that's good. And the June 2023 update, they keep saying, Bitcoin holdings grew 170% quarter over quarter. That's because it was starting from a very low point. They'd never really sort of been keen on holding too much crypto. I think they were at 100 or so, and they sort of moved up a bit. And they now hold 529 Bitcoin, so that's not exactly a huge holding, but it's up slightly. And they mined 491 Bitcoin in June, which is down. Difficulty is still sort of on the up, so that's expected to be down. I sort of had hoped it would be above 500 at least, but yeah, there you go. So I guess they do need to be pushing hash rate. As everyone else is. A lot of the sort of cards that people bought, even in the bull market and sort of put on order, are now being delivered and put online. So yeah, maybe this 491 will sort of continue to come down, and then you've got the halving next year. But still positive, still sort of within my figures when I did the Cleanspark valuation. And yeah, they just give a little bit of detail about the sort of new facilities. So Dalton, the newest campus, 2 facilities in Georgia, began hashing almost immediately after the acquisition was announced. They're racking 1,500 machines so far, and an additional 4,500 expected to go live in the coming weeks, which is good. And Washington, the expansion is expected to energize by the end of the week. 14,000 machines are racked and ready to start hashing. So should have a nice boost for July, hopefully. And sort of you'll get the full effect in August, because they're not all sort of online and we're already into July. So should have a little bump up in July, for July's numbers, and then a nice bump up for August's numbers. So pretty good. And Sandersville is sort of continuing to make headway. That is the big 6 exahash move. So still saying by the end of the year. All good. I don't really often cover that much in sort of the personal finance space, but this did really catch my eye in terms of sort of rough news, really, for anyone looking to go to university. Not sure whether there's more sort of detail to this. I haven't seen anything, whether this sort of does apply to everyone. But yeah, some of the new rules. So students will start paying back their university loans when they earn above 25,000 instead of 27,000. So thresholds come down a little bit, but that's sort of the least of the issues, really. The sort of big thing is loans are no longer written off after 30 years. They'll be written off after 40 years. So a lot of people sort of see it as a tax, basically, that, you finish uni at sort of 21 and you pay it, by the time you're sort of 51, you might be earning your sort of peak career money, and your debt then gets written off and you may not have paid it all down. But now it's 40, if you finish uni at 21, you're going to be 61 before it's written off. So, if the sort of peak of your career is, mid-40s to 60, say, you are going to be paying off your student loan quite heavily throughout that time. And sort of most people, I would think, now are going to be paying their loan off rather than sort of it getting written off and people still thinking of it as a tax. They've also said the interest rate will now be set at exactly RPI inflation. So could see that as a good or bad thing, really. RPI plus 0%. If we do sort of get inflation spikes, then that is going to be sort of quite a high interest rate. Can't really see RPI coming down all that much because it is normally the higher of the interest rate metrics, sort of CPI being normally lower. Obviously RPI at the moment is particularly bad, but it is sitting at 11.4%. So where a lot of people on student loans are sort of used to paying, some paying 3%, I think, some people paying sort of 5%. You would now, at today's rates, you would be paying 11.4% interest. So, yeah, paying that until 60, I don't really see the sort of commonly used phrase of it being a tax rather than a loan as still holding water. It's a loan and that you're going to pay until you're 61 now, or later if you start later. So, yeah, university, not really for me. Some pretty interesting moves in the debt markets recently. US and sort of UK still inching up. Sort of expectations, I guess, of more rate rises. The US 6-month bond seems to be the highest of them all at the moment, so they're expecting sort of a couple more rate hikes. This looking like sitting at 5.5% now. A lot of Fed members are saying sort of high fives, maybe even 6% by the end of the year. And yeah, it's sort of yields have gone above what they were just before the banking crisis happened. People were sort of getting into bonds as a safety back then, and we can't tell sort of whether this is just people anticipating the higher rates or whether it's them sort of dumping their existing bonds and the rate sort of going up because of that. You do get this sort of people, harshly selling off bonds, and so the price goes down and the sort of current yield goes up. But yeah, interesting to see. More interesting, I would say, is the UK one. So we're our 6-month bonds. Again, the longer term ones are sort of lower, with people expecting rates to come down in that time. In the next 6 months at least, people just see up. So the UK 6-month yield is now at 5.8%. Again, don't know whether this is people selling off the existing bonds, or trying to get out and more sell pressure so the yields go up, or if it's just sort of natural people anticipating higher rates, or a combination of the both. But you see, this sort of large spike up here was the sort of the crisis that came from the Liz Truss and Kwasi Kwarteng government plan. Everyone was sort of very, very unhappy, and they said, look, absolute disaster as rates spike. But they spiked to 4.5%, and sort of came down again after she got sacked, or resigned, and yeah, just slowly gone up since then, and are now way above that level. So 5.8% from 4.5 at the highs, and 3% before all of that, basically. So yeah, not a time to be in sort of long-term debt recently. Whether this will sort of spark more issues with the banks, because they haven't really got rid of that debt, so that will presumably be going down, and sort of the pension crisis that sort of came with this, because for some reason the UK don't seem to like stocks, they like bonds in the sort of pension funds, your Vivas and Legal and General and all people like that. They seem to take bonds which have a lower return, and so to get some return they go leveraged. So sort of heard a lot of pension funds were sort of 3x leveraged on government bonds, and yeah, with this now, people sort of presumably thought that has all calmed down now, but with these rates going up and up, the value of those bonds should be plummeting, you would think. But yeah, we'll see. I'm certainly sort of getting out of pretty much all of mine. I've got about 2,500 left of the 1 to 3 year US government bonds, but I think I'll probably be selling that off very shortly. And then just looking at the economic news, not much happened sort of until towards the end of the week. US Independence Day on Tuesday, so they had a day off. And yeah, then Wednesday you got the Fed minutes come out, and sort of unsurprisingly, I always think the Fed minutes is a little bit silly really, because you're looking at quite old news. It's just sort of the behind the scenes talk of the FOMC interest rate decision talk, basically, but from a month ago. I think you can really get the idea of what happened from obviously the decision and the Jerome Powell speech afterwards, basically. Seeing the actual minutes of last month is sort of, I would think, old news, but people still seem to get worked up about it. And then interesting sort of job numbers. You had ADP, the sort of pay slips payment firm company, report a huge beat over expectations of 497,000 jobs for June, but then on Friday this was sort of reversed, and yeah, quite a big disagreement. The official non-farm payrolls was worse than expected, heavily down on last month at 209,000. So expectations for both of them were almost exactly the same, and yeah, the actual number sort of came out much lower. So you had a hell of a spike on Thursday, or on Thursday, and then it sort of reversed. So yeah, a bit of a difference in those. There's always a bit of difference in part-time jobs and that sort of thing. You have more people in the gig economy, more people having 2 jobs, and they'll count as 2 people rather than one person having 2 jobs. So yeah, there's always a bit of variance, but yeah, interesting to see, certainly. Then you had the ISM everyone always focuses on the non-manufacturing PMI, because US is sort of no longer a manufacturing country or a manufacturing economy as such. So the sort of non-manufacturing PMI is basically a forecast of how the sort of general economy is doing, and that was a beat. So 53.9, up from last month and up from the forecast. Anything above 50 is sort of seen as expansion, not in recession. And yeah, so it was expected to be positive and was very, very positive. People still anticipating a soft landing, I guess. And then, yeah, the non-farm payrolls on Friday, and unemployment rate, as expected, come down to 3.6%. So this sort of spiked from 3.5 to 3.7, but yeah, so far doesn't seem to have been the start of something worse. It's come back down again. So yeah, that was the news for the week. So the portfolio, not a huge amount changed in the invest account. I've got a little bit of dividends, got a Shell, Broadcom and Porsche dividend, so that sort of bumped up a little bit of cash. I am sort of keenly looking to fill the rest of the ISA sort of as soon as possible, really. Thinking there's some sort of better buys potentially on what I've got in there. I could always obviously just move the holding in there, sell it here, move the money over there, and then buy the same holding. But yeah, I'm sort of seeing other things as potentially better opportunity, or sort of what I've got in there already as potentially better opportunities. Some of this as well, I will actually never be able to move unless the UK changes its rules. I believe Himax and Taiwan Semiconductor can't be put in the ISA, so as long as I want to hold them, they will have to stick in here forever. But I'm certainly looking at still the Vanguard Emerging Markets, sort of that, and the sort of cash that I've got, probably plus the dividends for the rest of the year, I would think would fill the ISA on its own. But I'm also looking at Shell, sort of seeing more of a move away from renewables. They do have their results coming out at the end of the month, and I was sort of eagerly anticipating their renewables number, whether their sort of gigawatt amount for renewables has gone up and the in development amount has gone up. But they basically already sort of come out saying that they're not moving away from it, but just quieting it down at the moment and focusing on oil and gas. They're basically saying they're going to be producing as much oil and gas as they are now still in 2030, which I guess the world still might need it, but I was kind of hoping for sort of more of a shift into renewables. They're still doing endless buybacks and sort of carrying on the dividends. I don't think they should get rid of the dividend, but I was kind of hoping they put sort of more of the buyback money basically into renewables. I think that would be better for the shareholder. Obviously, buybacks is just money completely gone. It's money that you could do something else with, and it'll bump up the share price a little. But I think sort of if they were, certainly when we come into more bullish times, a more sort of bull market, I think sort of being a more diversified company with oil and gas, but a lot of renewable, a lot of a sort of big renewable portfolio, could push the sort of PE up, which, if we went from even a 5 to a 6 PE, people sort of thinking diversified, a bit of green energy here and there. I think that would do a hell of a lot more for shareholders than just sort of a few billion on buybacks, which isn't really going to make that much difference. Obviously, £198 billion pound company, sort of 4 billion in buybacks isn't going to do a huge amount, whereas sort of 4 billion worth of renewables could make a huge difference. Make all the headlines, and it would sort of, obviously people will still call it greenwashing because they're spending more than that on oil and gas, but if you say you're spending 3-4 billion on wind and solar power and that sort of thing, it's just would sort of create a bit more of a nice sentiment rather than saying we're going all in on oil and gas. So yeah, I'm sort of almost tempted to maybe sell out before the results, but we'll see. Also looking at Porsche as well, so they're sort of halting some of the electric vehicle production, not really looking all that good. China sort of still obviously a bit of a struggle for them. A big part of their this is Volkswagen, obviously not Porsche, Volkswagen Group. A big part of their business is still petrol and diesel cars in China, which they're very, very quickly getting away from. Sort of, I believe they're 30% EV now. And yeah, the Volkswagen sort of EVs aren't selling particularly well at all in China. It's basically Tesla and then the home sort of companies, your BYDs and NIO and people like that. So yeah, I think they're not going bust as everyone says. The sort of Tesla bulls say they're going bankrupt in the next week, and they just say that every week. But yeah, I'm not sure I can sort of see as much of a return as I do on some of my other holdings, or potentially even going more degen and withdrawing it and putting it into crypto, or sort of options maybe. Yeah, I think over sort of the next 2 years, I can't imagine what Volkswagen is going to do stock-wise, but I can't see it doing sort of much more than, I don't know, 20% gain really, 30% gain, whereas, in the next 2 years, I see a huge opportunity in sort of my gold and silver miners, options potentially, crypto. So yeah, it's a risk, obviously. Potential sort of recession coming later this year, maybe early next year. Could see sort of all of my risky stuff crash. But yeah, potentially thinking about sort of taking that gamble. And then on the ISA side, still got a little bit of cash. Probably shouldn't have that there. Could be putting that and the 3-year treasuries in a money market fund while it's sort of not being spent. But I did spend a little bit of the cash. I'm kind of just not putting it in a money market fund because I thought I was going to be spending it almost imminently, but it's still not going just yet. Bought 500 shares of Coeur Mining. So that's bumped that up to a reasonable position now. I was hoping to buy sort of a little bit more of Equinox Gold, but it sort of shot up just before I was hoping to buy. But that's a reasonable holding. But you can see right at the top here, Cleanspark is now sort of my biggest holding by quite a way, if you take the other amount in the IG account, and that has rocketed up. So I only got in at sort of $4.18 average cost in this ISA, and it's already 43% up. A little bit surprising considering the Bitcoin price has sort of barely moved. But yeah, maybe they're anticipating things, or maybe it's because of their specific stuff, what they've been doing, the new facilities, and potentially sort of increasing exahash very shortly in the next few weeks. But yeah, that's certainly been a nice move. Sylvania Platinum absolutely collapsing at the moment due to sort of mainly the rhodium price, if I'm reading it right. It's rhodium sort of halved basically in the last 2 months, so that's the biggest part of their revenue. They're not going bust, I don't think. They're still got a huge cash pile, and they should be sort of, I would have thought, around break even, if not slightly loss making. We'll see sort of in the results at the end of the month. It's not going to be pretty, but yeah, certainly not looking too good. The potential hydrogen economy side as well, been sort of researching and discussing with some of the guys on the Discord, and sort of that seems like it's maybe not all that viable. So yeah, potentially thinking basically after petrol and diesel cars, there isn't a huge amount of use certainly for rhodium and palladium. Maybe some more for platinum, but yeah, if there was no rhodium use, then the stock's basically sort of not worth what it's currently worth. So yeah, I'm holding it, just sort of see where we go. rhodium has done some sort of very strange things over the last few years, so I wouldn't want to sort of sell here and then it rockets up. So we'll see. But as you can see, carrying on pretty heavily with the gold and silver miners, and sort of not too much move in anything else. I got a Vici dividend of like 15 quid. Then the IG ISA obviously is just 4 stocks. Pan American Silver sort of down a bit again. Not really looking to buy that. Prefer the other ones in my other ISA. And Cleanspark obviously having the much lower average cost on that, $2.65. That is now over 100% green. So that's nice. It's, as I say, over 20,000 in that now. It's by far my biggest holding. So that's good. And if you include the options as well, the options are doing even better. I bought 3 Coeur mining options, so that's a bigger position now. And I bought some Himax options, sort of thinking they look good potentially for the next year and a half. Some January 2025 options. So yeah, putting a bit more into there. I've still got a bit of cash sort of sitting there ready to buy more options, but yeah, not looking too bad. The Chinese tech as well sort of had a bit of a move up. Alibaba, interestingly, sort of got fined $1 billion from the looks of it, and I think everyone's just seeing that as, well, they've got cash in the bank to pay that, and this means it's done and dusted. So people like the certainty, even if it is bad news. So that went 8% up on the day, putting me at a sort of much less negative position. So basically between the two now, I'm at sort of pretty much break even. But we'll see where they go from here. So yeah, that's the portfolio for the week. Interesting sort of mixed bag. So leave your thoughts in comments below, and like and subscribe. See you soon.